Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Friday, October 31st, Halloween. So I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So as I take my 16-month-old daughter trick-or-treating here this evening, I'll either go as the Chicago super fan or I'll throw on the suspenders, the suit, and I'll go as Lewis Winthorpe and have my Duke and Duke Commodities Brothers trading outfit on. So we'll see what happens and how it plays out with the weather. Now, looking at the markets here and looking at the ETF flows, because the ETF flows are really why we're seeing some of the liquidation that has taken place in the gold and silver market recently. Those ETFs stepped in the back into the market here in a big way yesterday, snapping that 6-day losing streak. The ETFs added about 1.1 million troy ounces of silver to their holdings in the previous trading session, bringing this year's net purchases back up to 99.5 million ounces. The exchange-traded funds also added 120,000 troy ounces of gold to their holdings here in the last session. In total, gold held by ETFs rose about 17% this year. They're at about 97.5 million ounces. And if you look at gold, it is up about 53% this year, and it rose 2.4% yesterday. Now you look at the overnight price action, really kind of disappointed that the silver market on December was able to just get up and just touch that 49 level, but not break through it. I still tell people that I believe that our days with $50 and being above $50 are not behind us here. And I believe that more catalysts will come. We've had some of the shakeout. We've had some of the physical tightness go away in the London market here, but I think that the underlying fundamentals, the catalysts, the ETF flows, and the broadening of the bull market here is going to continue to push these futures higher. Now, looking at some of the Friday process that I generally do. So every Friday and almost every single day, I kind of have a checklist that I go through on what needs to be done. And usually what I'll do is I'll look at where we are at on the week and on the month in any particular market that we've got some significant exposure to with the clients. Now, despite gold being over $4,000 an ounce, it is set for its second consecutive weekly loss. What I'll also do is I'll look at the monthly chart and I'll look back and say, hey, we are on our third consecutive monthly gain. So a 2-week loss and a 3-month gain here just tells you that we are just having a bit of a pullback here. And I'll check and see where the price action is here coming into the close. So the all-time high in the gold market was earlier in the month at $4,398. And a short-term pullback here in this long trending market allows investors the opportunity to gross back up their exposure. 38.4280 is the low for the month. Now, looking at the copper market, something interesting is there was one big bullish bet on the copper market that I've been tracking, and I've laid out on this video several of these large option bets in different various markets here, everything from the oil market and especially surrounding when we had the US, Iran, and Israel conflict. And then also I'll look at that particular option flows when we get to other key catalysts as well. We outlined some of them on the silver market and the one that I'm watching in the copper market. Now, copper did have a setback yesterday, slightly lower here. I did see Goldman Sachs put out a slightly more neutral to bearish report saying that the market is structurally just a little bit overbought here, but it was China's official manufacturing PMI that fell to 49 in October, suggesting that the activity dropped the most in 6 months, with new orders shrinking the most since 2023. So that's where you get some of the pullback occurring in the copper market. Now, the options that I was talking about, and this is not a recommendation, someone put out about $12.9 million as an outlay between September 15th and the 22nd to buy the December copper 495.30 call spread. It paid off in a big way as December futures had rallied about 8% coming into yesterday, making that position worth about $38.6 million. Now, the trader isn't fully cashed out. They also bought the December 545, 575 call spreads, reinvesting about $8 million worth of that profit on a potential another 7% gain on those contracts here that are set to expire in late November. Now, looking at some of the top headlines here in the equity markets here, the futures are sharply higher with Apple and Amazon results poised to ignite that tech rally. So you look at the S&P 500 and the NASDAQ just exploding overnight. You look at where Amazon and Apple's forecasted for major surge in sales in this holiday season here, with Amazon's cloud division notching out its best quarterly growth in almost 3 years. So you look at Amazon up about 12% in the pre-market. You look at Apple up over 2% in the pre-market. For our wealth management clients, Amazon and Apple remain within our top 5 holdings. Our chief investment officer, Bill Baruch, he made the bullish case for Amazon 2 weeks ago on CNBC's halftime show. So if you'd like to learn more about becoming a wealth client, send an email to info@bluelinecapitalwealth.com. Now you look at the S&P 500 up about 0.6% at 6896. You look at the NASDAQ up over 1% here at 26,177. That's up about 300 points. The Russell 2000 is lagging with those small caps, and I suspect that some of that hesitation on the Russell pushing back higher is the rise that we've seen in Treasury yields. You look at crude oil markets. Well, I'm slightly bearish on the oil market here, where the market has been unable to really break out to the upside and get any kind of bullish momentum going. Remember, we had one of the craziest geopolitical events of all time happen a few months ago, and oil was really unable to break through that $80 mark, and they know that Iran is unable to cut off the Straits of Hormuz. So you do have this OPEC meeting this weekend. Members, including Saudi Arabia, are looking to endorse another boost in supplies. I do a checklist on the market every day where I'll look at the dollar index. Where's it at? It's at 99.35. You'll notice something between the dollar and the gold market is that they're both positively correlated. Now you look at the 10-year Treasury yields rising 1 basis point to 4.10%, so 4.10% on the 10-year Treasuries. My opinion is exploiting these higher Treasury yields for your positioning is probably one of your next best opportunities out there. I believe that the inflation data coming out for the next month, the CPI data, will show that inflation is starting to decline again, and it should drive those yields back below 4%. Now, if you look at the VIX futures, VIX are down 56 points at 1853, below that key 20 level. And you look at gold volatility, it's starting to consolidate here right in this mid 24 to 25 range, well below the 30 where it's really dicey out there, but still at an elevated stance here where we're seeing wide ranges of volatility back and forth. Surprisingly, we've only had a $60 range in the overnight session, as the average true range in the gold market's about $95. You look at the silver market, it's about $1.10. So we look at the overnight range on the silver market, only about 75%. Perhaps some of the month ending positioning could contain this market in either way. Now, if you look at something that's going on in the global markets in Europe and Asia, you got European stocks, they're trading steady on the last trading day of the month, set for its 4th monthly gain in a row, boosted by the resilient earnings and the trade optimism. The MSCI Asia Pacific Index was steady, while the MSCI China Index is on course for its 1st monthly loss since April. Now you look at some other things here with regards to earnings. The earnings season remains top of mind, with more than 60% of the S&P 500 companies have reported up to date. We've got 150 more basically to go into today and next week. And out of the 304 S&P 500 companies that have reported so far, 83% have managed to beat analyst expectations, while 13% had missed. We will have 2 Fed central bank speakers here today, Logan and Hammock. And then you look at the CME's Fed Watch tool, you got a 66.8% chance of a 25 basis point interest rate cut. So what I believe will happen is this will start to rise back up into the high 80s, low 90s, maybe have a small setback ahead of that Fed meeting, which is about 6 weeks away. There is a 33% chance that's unchanged. So the markets are seeing this 66.8% probability that the Fed will make another 25 basis point interest rate cut. That's the December 9th, 10th meeting here. And this is down from a 91.7% chance that they cut rates here a week ago at that same meeting. So it's dramatically declined. I believe that this will start to come up. You'll see yields break back below the 4%. You'll see 10-year Treasury yields start to rise back up. So I'll be looking at bonds. I'll be looking at 10-year notes. I'll be looking at copper on this particular sell-off, making sure nothing structurally changed. And then you have Bitcoin futures bouncing off that low end of the range right at about 107,000. And it tends to work in different price ranges. So like 125, 123, 116 is your pivot. Then you get down to 113, 110, and then 108 to 107 is your levels of support. So a big snapback, you have the options or the October futures expiring here today. So most traders had rolled over to November already. So if you got any questions on futures or option trading, you'd love to open up a futures trading account with us, send an email to info@bluelinefutures.com. And sorry for wearing this gaudy Bulls jacket, but I do think it's hilarious. So if you guys got any questions, again, shoot that email at info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Happy Halloween. Go get them.